The World Economic Forum recently conducted a survey of economists, and it revealed that nearly 2/3 of them anticipate a recession in 2023. There is no doubt that a recession spreads worries all over the world, and according to numerous surveys, this is the case. In an effort to reduce inflation, the Federal Reserve is raising interest rates more aggressively than it has ever since the early 1980s. When the central bank starts to raise borrowing costs, a recession is frequently the result. What exactly is a recession anyway? A nation's citizens generally become a little bit wealthier in a developing economy as the value of the goods and services it produces, or its gross domestic product, rises. However, the value of this can occasionally decrease, and as a recession is typically described as when this occurs twice in a row over a period of 3 months, this happens to be the case. Normally, it is a sign that the economy is struggling and may indicate that businesses will be forced to make short-term layoffs. The US economy is showing a traditional early warning symptom of recession, multiple of them in fact. And billionaire investor Ray Dalio anticipates it will get worse over the next 2 years. The founder of Bridgewater Associates has claimed that the US economy is still vulnerable to further harm due to factors including rising interest rates intended to curb record high inflation and other concerns like Russia's invasion of Ukraine, which is upsetting energy markets. I think it's going to get worse in 23 and 24, which has implications for elections, Dalio said. The decline in earlier accumulated cash balances, the downturn in both the housing and the car industries, as well as an increase in credit default rates were among the major warning signs that he highlighted. We are right now very close to a 0% growth, Dalio said. Also, the eminent investor recently declared that the dollar-dominated global system is fading away, adding, "We are now going to have the major powers and their allies form economic, currency, and military blocs." According to Mr. Dalio's theory, a system of economies in which the US dollar served as the de facto global reserve currency would cause the recently increasing trend away from globalization to continue. Instead, the world will become increasingly divided into rival blocs based on military, monetary, and economic factors. He believes this tendency will continue in large part due to the fact that each country's populism and nationalism is growing in preparation for greater conflicts with outside powers, most importantly the United States. He continued by saying that, in his opinion, the risks and repercussions of a future war between major powers are greater today than they were during the Cold War because the Soviet Union was never a comparable power to the United States. China, on the other hand, has recently emerged as a genuine rival to the United States in both the military and the economy. The US dollar-dominated global system is set to come to an end as a result of this rising rivalry, which is quickly approaching military and economic level. As a result, nations like Russia are feeling more confident about openly defying the international economic system that is dominated by the US dollar and undermining the current US-led global order by initiating their military invasion of Ukraine. He stated that the two greatest economies in the world, the US and China, are engaged in a war for dominance, but added that neutral countries like India will benefit in the future. Dalio further stated that nations who avoided war would benefit more than others. In response to the most current GDP data, the Indian Monetary Fund declared India to be the 5th largest economy in the world at the time Dalio made his comments. In the third quarter of 2021, India's GDP overtook that of the United Kingdom to take over 5th place in the world, according to IMF estimates. The loss of the US dollar's dominance will almost certainly raise inflation in the US because other countries will be less eager to hold dollars on their balance sheets. As a result, they will ship them back to the United States in greater numbers, where they will enter circulation and increase the money supply. At the same time, the cost of goods and services will likely rise everywhere in the world, including the United States, as access to cheap labor and essential raw materials like those available in China, Russia, and Iran eventually deplete. Russia and Iran, two other major oil producers and exporters, are currently on extremely poor terms with the United States and are increasingly being drawn into China's economic and military orbit. So if this trend continues, the cost of energy will likely increase going forward. In particular, the increasing coziness between the Saudi Arabians and the Chinese and Russians is a troubling trend for the United States. Last but not least, the extreme worsening in the US-China relations sector, particularly if escalated to an open confrontation, would surely have a negative impact on the world economy.